Your goal is to obtain truly obscene amounts of capital financing on terms your banker or those vulture capitalists only think of in their worst nightmares. In this video, we will discuss why you don't need any of these people, and now you can learn how. Hi, I'm Clint, and I'm part of the Rainmaker analytics team that helps run the Envision Capital Finance Business Accelerator program for commercial real estate developers, businesses, and entrepreneurs who are seeking up to $75 million in capital financing for their projects or businesses. Structured finance is the art of creating financial leverage using everyone else's money, my friends. Once you learn this, you are truly on the path to freedom. So strap in for this video, hit the subscribe button, be sure to punch the notifications bell as we continue to put out insider tips and tricks to help you beat Wall Street at its own game. As we discussed in our previous videos in this series, when you give someone the opportunity to reduce the taxes they otherwise would have to pay, you don't have to give them as much cash. The cash you don't have to give them, you get to keep. It's really simple, isn't it? Please comment below and let us know what your experiences and questions are on tax advantage investing, and we will, of course, respond. Tax advantage investing is the process of intentionally designing the financing that goes into your deal to soak up tax credits and other IRS-sanctioned income offsets to make the investment worth more now and later. The key is also understanding how to strategically deploy these benefits as your business grows throughout its life cycle, and that is where the Envision Accelerator program really comes into focus as a value proposition. We don't act as hucksters offering a template, a pitch deck, or some goofy online thing. This is an end-to-end support program from capital market specialists who eat this stuff for breakfast and live with it every day, and you get that by becoming a licensee. Tax advantage investing boosts that overall yield for people who would invest and have the taxes to pay. Hey, luckily, as it turns out, just about everyone who's going to be an investor is going to have taxes to pay. So if you tell someone you can invest in a given deal and get a tax break to boot, well, Pilgrim, you have the opportunity to really make a deal sing. The key takeaways come down to assets placed in service. Business assets are subject to depreciation and amortization. That means they become worth less to you over time, and a portion of that loss can be claimed on the tax returns of the owner of that asset. In crowdfunding deals, we seek to place these assets in special purpose vehicles so the tax benefits can be passed through to the investors in your crowdfunding. In return, they exchange capital now, investing in your offering, to obtain those pass-through tax benefits. And that's the secret in the sauce. The structure of the transaction to pass them through, the structure of the design of the project in the business to maximize those assets, and the structure of the payouts creates something that's incredibly powerful called free cash flow. You want more free cash flow and less problems. Free cash flow is your friend. If you want to find out more about this, please contact Envision. Go to the website, shoot us an email, or even give us a phone call. The consultants at Rainmaker Analytics are here to help. If you enjoyed this video, please hit that like button. Share it with your friends, entrepreneurs, and other investors. Send us comments about what you're concerned about, and we will, of course, answer them. In the meantime, remember, once you understand these principles, the odds will ever be in your favor.